Hello, it's Big Cheds, and this is the Trading Encyclopedia Daily Education series on my YouTube at Cheds Trading. Find me on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about the idea of a measured move. What is a measured move? What is a price target? What does this mean in classical charting? So just to start out with a couple visual examples. For example, here, a bull flag is taking the length of the flagpole, extending from the breakout. Same thing here with the bullish wedge. And really the idea is to give you a basic idea of where the price should go. But what's important to know about measured moves is they're just a general guideline, and you do not want to ignore prior price structure, right? What do I mean by that? So let's take, for example, we have an ascending triangle. Okay, here's an ascending triangle. To take the measured move, you take the height of the consolidation and you extend from the breakout range. So here would be your measured move. But what you want to keep in mind, what has come before that. So let's say back here, you actually formed a descending triangle, where you had like a descending triangle that broke down. And this was whatever, a few months before that. And the breakdown point or the lost support was right here. Right? So what you have essentially is an obstacle in the way to the measured move. So even though you draw your measured move, you do not want to ignore the recent price history or the obstacle, right? It's like a runner running and doing the hurdles. You have to jump over the obstacle. You have to be aware of it. You can't just overlook it, right? So you take, like, that's your ascending triangle measured move. Let's say you have a head and shoulders. And a head and shoulders, say it was a breakdown, you take the height from the head to the neck baseline and you extend it out. And that's how you get your measured move. Same thing with like a cup and a handle. Take the height of the cup and extend it out. So that's generally the rule in classical charting, is you take the height of the consolidation range, a bull rectangle, in advance into a sideways range with well-defined price boundaries, upper and lower. Take the height of that consolidation range and extend out in this bull rectangle. That would be your measured move. So a measured move is fine to have a general idea, a price target, but you want to make sure you're not overlooking any obstacles along the way. For, like I said, any price consolidation here would be lost support that is in the way of your price target or your measured move. This is the measured move in classical charting. And this is part of the Trading Encyclopedia Daily Education series on my YouTube channel, Cheds Trading. I'm on Twitter at Big Cheds and Bitcoin Live. Thank you, everybody. Hope you're doing well, and I'll talk to you soon. Big Cheds out.